Welcome to the Apartment Investor Show, where we help you get smart and invest smarter in multifamily real estate. I am your host, JC Castillo, founder and managing principal of the Multifamily Property Group. And joining me as always is my good buddy, my co-host, the godfather of lending, Mr. Paul Peebles, national underwriter for Old Capital Lending. Paulie, how are you feeling today?
Doing great, JC. We're just enjoying the summer months. We took a couple of weeks off between our podcasts just to kind of enjoy our families and get away from all the craziness that we've seen with this COVID-19. So, it's been a pretty interesting summer. I live in Dallas, but I traveled out to California just recently and drove out there. So when you would typically fly an airplane to be out there in 2-3 hours, but if you drove, it's 2 or 3 days. And so what you have found, I think COVID is one of the positive things, is families have gotten together and maybe gone for a car ride or gone to some locations they wouldn't do and spending more time as a family unit. And so that's what we did. We drove out to California from Dallas and stopped in Santa Fe and stopped in Nevada and stopped out in California. And then we actually had a rental car, so we flew back. So we kind of enjoyed that part of the summer, but now it's time to get back to work. And so let's get back to work, JC.
Well, and your timing was perfect, Paulie, because you came out to California, where I live, in the Bay Area here. You came out before all the fires hit. We've been battling several fires here in California, which I hope that we'll get through here shortly. But let's get back to business, Paulie. And you know what? I'm excited about today's guest. Paulie, we're always looking for interesting topics to talk to all of these multifamily investors out there about. And one of the topics that really caught my attention is, and the person we're about to bring on can give you this from firsthand experience, is that, Paulie, there's a lot of people out there that are taking this hard-earned money that they're making, and they are going in these multifamily syndications and working with all these general partners, and they have to basically figure out whether they're going to trust this person and put their hard-earned dollars or they're not. And, Paulie, one of the biggest things that I keep telling people is if you just do a simple background check on your business partners, you can find out a lot. And so today, what I thought we would do is talk about one of the most basic blocking and tackling techniques you can do as an investor to protect yourself. And that is how to do a background check on your potential business partners. And so one of the things I want to do today with our guests is not just get into that specifically, but also talk a little bit about maybe some investing, what I would call nuggets of wisdom that she might be able to impart to us. But this particular person that we're going to have on the show, her name is Jennifer Kline, Paulie. She came to us through a mutual connection. And, right away, I was really impressed with the fact that she really took her time to do the basic check downs that she needed to do to make sure that not only that the investment vehicle was the right vehicle for her, but more importantly, that the people that she was working with passed all of these, let's call it basic blocking and tackling checkdowns, like a background check. So, Paulie, without any further ado, I want to welcome to the show Miss Jennifer Kline. Jennifer, thank you so much for joining. We're happy to have you on the show. It's
my pleasure to be here. Thank you, JC.
Good. Very good. So, Jennifer, let's get right into the topic at hand. Maybe what you can do before we go there, though, is just give us a quick little sort of maybe a 30-second or 60-second summary of your background, and so the audience knows a little bit about your story.
Okay, great. Well, born and raised in California, and I come from a real estate family, I guess. Didn't start out that way. My father was an engineer. My grandmother was a powerhouse. She believed in real estate. In fact, I remember as a kid, she would always say, if everyone bought a duplex, there would be no people on the street in their old age. And that's the way I was raised. When I was a baby, every Sunday, we would go look at real estate. So I've been looking at real estate probably since I was 6 months old. I started investing in residential real estate in the 90s, and then I went to commercial. My father helped me in the 90s in California. And that's where I am now. I've just followed it along.
So Jennifer, tell us a little bit about sort of what your methodology is for when you're going to choose to work with somebody in the real estate business as maybe a partner? Because you've been around for a long time. You've seen lots of different things happen in real estate. Tell us specifically about what are the steps that you do to make sure that the person you're working with is really who they say they are and can really do the right thing for you.
Mm-hmm. So, just in a nutshell, I invested when I was in my early 30s in a spec home, and I didn't do any research about the person. And he was a great builder, very creative, and I lost a bunch of money. Couldn't do any business. And that's what started me on the path to really, unless I'm doing everything, unless I'm, gonna buy the place, manage the place, be the only owner, then I've always, after that, I learned that you have to really do some research. And this is, your money, your hard-earned money. So, when we met each other, JC, you and I just really connected, and we talked about real estate. I don't know, maybe 2 hours. I mean, the whole afternoon went by, and I really liked you, and I loved your concept. I thought, wow, I can see myself investing in your company. But you challenged me. You said, Jennifer, we want you to go do a background check. And I said to myself, if I'm going to actually invest my money, I do want to do a background check. So that's what I did.
So talk about, a lot of people, when we say background checks, there's a lot of different ways that people think about, but what I felt like was smart about what you did specifically was you got pretty specific about exactly what you looked for and the level of details that you were able to get from running a background check. Maybe can you give the audience a little bit of tips on specifics of what you're going to do to make sure that you can get the most information about the person that you're working with?
Right. Okay. So what I have a friend who's a PI. So it was very easy for me because I just called him on the phone and said, hey, I want to do a background check. He referred me to a professional person that does that. And I talked to them about what concerned me. What I don't want, there are certain things. You don't want somebody that didn't pay their bills. You don't want somebody who cheated, didn't pay contractors. You don't want, there's certain things, but also a PI, the people that do the background checks can steer you as well. And you can ask them, what are the most important things that you want to know? But some of it's just logic. You don't want people, people's political affiliations, I don't care about that. That's not anyone's business. But if it's having to do with finances, if it has to do with criminal, if it has to do with, credit issues, I want to know about that.
Let's talk a little bit about that because, as Michael Becker says, that you'll only invest with people that you know, like, and trust. And underline the sentence part of that in the word is trust. What did it cost you to run that background check? And
you don't want to know. You don't want to know. It was either $250 or $500. I think it was maybe $300. I don't actually remember what I paid, but it was so small compared to the wealth of information I got. I got a huge flag that just said yes. There were no issues at all. Zero.
So what type of information did was it a computer generated printout, or did they do surveillance on JC, or what kind of information did they provide that made you feel comfortable?
It was all, it was like 120 pages. It was all, wow. It was long. I just started skimming through to see if anything was relevant. And basically it was very thorough. No surveillance, but it was all through records and electronic records.
That's great. Now, JC, Jennifer's a little bit of unusual limited partner that's investing in deals. And we're not saying that you should not do that, but most people do not do that. It's a little bit, that's taking the ball and running with it. But I think it's important to do a background check of the person that wants to invest your $100,000 for them, whether they work at a financial institution that they want to take the $100,000 and put into stocks and bonds. You have to have conversations with maybe some of their other limited partners that have invested in groups just like JC's or another group, or the people that have invested with Merrill Lynch or Edward Jones. They kind of figure out if they'll let you talk with people about what type of a person that person is. The background checks, I think, are very important, but I think you could probably run some for maybe $60 or $70 or $100. But having a private investigator for a couple $100, that's pretty good. I don't know if everybody's going to be able to do that, but I think having that conversation with an investor for 2 hours is very important, and having the conversation with other investors that have invested with a guy like JC or another general partner is very important. What's their communication level? How much data do they give you on a monthly basis? Did they put together a pro forma at the beginning that compelled you to invest with them? And have they kept kind of to that pro forma? Have they gone off the railroad tracks someplace? When they actually had a hard deal that they were starting to push out distributions for it. But background checks are very, very important. I can't stress that enough. JC, what's your take on that? On maybe deals that you've done personally, and what else have you seen out there?
Yeah, I think, Paulie, my sentiments mirror yours, and they also mirror Jennifer's. I think that if you think about it, the average investor is probably going to be putting in, anywhere from 100 to 150,000 average, right? So if we talk about, even if it's $1,000 to hire a private investigator, that's going to really help you get the information you need. That's still, a lot less than 1% of what you're going to put your at risk, which is a huge amount of money. And so I think it's well worth it. And I think that what you get in return is the initial bar of whether you even want to have conversations moving forward, right? I mean, it's not going to stop at a background check, because the next thing you're going to want to do is understand the partner's investment philosophies and whether they align to yours. That's another big one I think that people don't necessarily think about in the very beginning. They kind of focus on the deal itself and whether the numbers make sense. But also, if your general partner has a different investment philosophy fundamentally than you do, then you could also set yourself up for some speed bumps along the way. So, I think that background checks are a requirement for the initial green light, red light, and then you sort of take off and do a bunch of other stuff from there.
I think it's really important, in this day and age, because we have the internet and we're all on, our email, we're being scammed, there's a dark web. We're very savvy, now about the internet, but we're not very savvy about people-to-people contact and how people can come across a certain way. They can be very good salespeople. They can have their shtick together. And yet and that's the reason to do a background check, is that you find out so much more about a person. If you see that maybe 25% of their bills they're not paying, or they're late, you see these chronic kind of issues, and and could be red flags for investing with them. And the other really important thing I would say is that I have a good team. I have an excellent lawyer, real estate lawyer, and I have an amazing commercial broker. And again, it's like surrounding myself with competent people that have a lot of experience and also check out on the background.
Jennifer, one of the things that I thought was interesting about your story, and one of the things that Paul and I are big on is that, I live in California and Paul's got background in California, but we've had a lot of success in out-of-state investing, let's call it, investing in Texas. Now, you've kind of come up in California as a California investor for pretty much the majority of your investing career, and I think maybe recently you're starting to branch out, but maybe talk a little bit about your experiences over the last, let's call it 30 years as a California investor, and really more specifically, what you're seeing changing today about the landscape of being an investor here in California and what that means to you.
Mm-hmm. I recently did a series of 1031 exchanges, and my original goal was to be mostly out of California. But when I went to actually make those decisions and look at the property. In a 1031 exchange situation, you only have 90 days to identify property. And so I ended up doing some outside of California and some within California. Now, I used to live in Santa Fe, New Mexico in the 90s, and I invested in Santa Fe and I invested in New Mexico. And I also simultaneously invested in California. And over the 30 years, the California real estate it was like hitting the jackpot. And the New Mexico real estate made income, but did not appreciate to the level of the California real estate. So at this point in my strategy, I'm the middle path. I'm looking at some property outside of California, like you would do when you're investing in the market. You want to have some more, safer, and you want to have a wide variety of real estate. So if one area has a problem, that you can go to the other area and have a balanced portfolio.
Yeah, I like that, and it sounds like you're going to be focused on your California long term for also giving you a nice little equity play, and maybe your out of state kind of helps with the cash flow as well. Would
Exactly.
that be what I would hear you say as well?
Yes, I agree with that.
Yeah.
Yeah.
Okay. Almost like Silicon Valley, that there's high technology stocks, Apple and Google, they don't typically pay a dividend, but they actually go up and up and up and up, just like California real estate has in the last, say, 100 years or so. And there's areas like outside the state of California that almost like a bond that you don't have to put a lot of money into, maybe 25 or maybe 30% into the deal, but it pays a cash flow like a bond. So I guess it depends on what phase of your life that you're looking to do. If you're looking to have cash flow, maybe California, maybe if you put money into a triple net, high quality triple net, maybe that is going to give you some cash flow, but the yields on that are going to be 3 or 4%. Where if you go outside, it may be a little bit higher to get some yields, but you're not putting a tremendous amount of money down to get those yields. You're not putting down 50% or 60% to get those yields. But California is done very well. I don't have a problem with California, but I think you guys are going to get charged at some period of time, get 16% state income tax, which I'm concerned about, which makes 54% all in state and federal property or income taxes, which may happen, may not happen, but they're looking for ways of generating income. So, we've talked a little bit about the past, but what's your future on California?
That's like asking me what is the future of the Dow Jones Industrial and the market. It's, to me, I can't believe it's gone up this much. I have been waiting for a crash on both fronts. So that's why my stated, I wanted to go outside of California. It just didn't work out for the 1031 exchange. And I found some really good property in California. But that was, I looked all over. I looked in Washington. I looked in Texas. I looked all in the Western state area. And that's what I found. And, it is a concern. I agree. It is a concern.
Yeah. And I think that, as I always say, the truth is usually somewhere in the middle. So I think that while, we are seeing a lot of aggressive proposals coming out of California right now for taxes, both wealth taxes and also state income tax, I'm hopeful and confident that we won't go to the very far end of what's being proposed, but it'll probably be a little bit more painful than what it is now, but maybe not to the extremes. So we'll hope for the best and plan for the worst in that case. Well,
yeah, Jennifer, I want to talk, and we'll finish up the conversation here. I want to talk a little bit about women in real estate, and have you found it to be challenging to be a woman in real estate? Do you think you get all the opportunities that maybe some of your male counterparts get? What are some of the drags you feel maybe, or what's some of the positives? Tell me about women in real estate, what your opinion is right now in 2020.
That is such an excellent question. About 5 years ago, I made it a stated intention in my life to have male friends and to have be able to talk business with my male friends. And it's 5 years later, there are absolutely no men in my life that I can really discuss, real estate with. And women in my life, most of them are not interested. I start to talk about numbers and they are not interested. So I feel like I'm way out there on my own in a lot of ways. And again, this is why it's so important. I'm going to go back to the whole doing a background check, seeing the people that you can trust. I have discussed, I shouldn't, JC, no offense, because you and I have had some conversations, and you have actually said to me, anytime you want to talk about real estate, please give me a call. So I misspoke. I have one friend that is willing to discuss real estate with me, because it is what it is. That's the way it is for me.
If people like young ladies wanted to get into real estate, what's their path that you see today that you could give yourself 30 years ago?
Well, there is a book that my real estate agent gave me called The Little Book of Triple Net Investing. And I don't remember the name, the author, but it is called The Little Book of Triple Net Investing. It's a small, kind of guide. I highly recommend that book. It gives you a very basic understanding of that market. And I'm going to...
Do you go out and network at all and go to some of these meetups? How do you meet? How do you meet people?
I never have done. It was in the family deal, so we would talk about it. And like I said, I've been looking at real estate for years and years and years on my own. Just looking at any. Now we have Zillow and things you can look at just to dream. And in fact, I have a funny story. One of my friends isn't getting involved, and I'm helping her with the triple net investing. And so she was turning off on me. And I said, look, think of it like dating. Think of it like dating for a man. Like, you're going to go on Zillow, you're dating, you're seeing what's out there. She started laughing so hard. And I was like, she actually went on Zillow and started looking at commercial real estate. So there you go. I mean, you got to get creative, about just trying to look at things like in a way. And I do have to, I want to, please forgive me, JC. I know that the goal is not to plug you right now, but your company is so wonderful because you do not have to have $1 million in order to invest. I think that is for a woman, this is one of the hardest things to deal with is if you're not independently wealthy, to start out to do your first thing. Like for me, I never wanted to own a duplex because I didn't want to manage a duplex, but I did, but I didn't want to. This commercial multifamily for a female is such a much more better deal because you're not fixing things, you're not organizing, it's all handled for you. And also you don't need to have $1 million to invest. And that's really important. I mean, you take what you have, $25,000 or whatever, or $50,000, and you start there. And I think that is, that's what I want to say to women. It's like, start small, try to get, something that is not going to be so overwhelming that you're going to get turned off by the experience.
Even though JC's married, he is still in the market as an investor.
Always in the market. And Polly, one of the things that I personally love doing as part of our company is I love building relationships with investors that want to get more insight in how to invest in multifamily and do it the right way. I've been investing in multifamily for the last 14 years. You've been in multifamily, probably almost twice as long as I've been in the business. But there is a wealth of information that we've gathered, some through hard knocks and others and others through personal experience. But if you're out there and you are, you're wondering, how to get into multifamily, if you're looking to invest in multifamily, if you just like to kind of get a background on what multifamily is about, you can feel free to go to our website, multifamilypropertygroup.com. And you can actually click on a scheduled 15-minute consultation with with our website, and that'll actually put you in touch with me personally. And you can ask your questions in 15 minutes, and we would be happy to give you a little good advice to get you going in the right direction, Paulie. Because I think that is something that I think Jennifer also can appreciate, sort of being around the business for so long, and having people that you can turn to for expert advice is critically important.
It absolutely is. And Jennifer, thanks for coming on, spending some time and telling a little bit about your story. I think it's a great one. Because again, you're only going to invest with people that you know, like, and trust. And so you got to find that person, whether it's done through a PI investigation, having communication with the general partner is in the depth of what you did, but also too, is you want to talk with other people that have invested with that person, maybe follow up with them and kind of see if they've kept to their word, what they had said originally, and what they're actually executing out there on paying the distributions and doing what they say that they were going to do and actually executing and doing it. So Jennifer Kline, thanks for hanging out with us. We certainly do appreciate that. Again, I'm Paul Peebles with Old Capital. That's JC Castillo. Have a great day.